Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market. As usual, we'll discuss the euro currency situation. Start from the daily time frame. Well, as we thought, our market has continued, moved to the downside a bit further. So although that was some significant support, this was the monthly pivot point and freed support from that whole swing to the upside. Market still pierced it a bit and has reached the middle area between the 50% support from that swing and 618 support. Also, as you can see, market stands close to the daily level of oversold. For today's trading session, it stands at 135.34. Another significant moment is that daily trend has turned bearish. So now we have the monthly trend is bearish and daily trend is bearish. And if market will close this week on the current levels or a bit lower, then we will see that the weekly trend also has turned bearish. That will be a very significant event in the medium-term perspective. Still, this is the first plunge during this whole thrusting move to the upside. And that move to the upside was really significant. So in that terms, we could expect some retracement to the upside, just because market have some momentum during this move, and very common price action when the market shows some attempt to continue this previous move just based on the momentum. Well, the target of this retracement could be different. Well, it could be just somewhere 50% or 38 even, but at least it should be 138.47. Somewhere in that area, I think that market could show some retracement to the upside. From that perspective, since market stands in some support, market has significant momentum, and that is in fact the most important reason in the context for the potential retracement. Since the current fundamental situation and in general the price action during the recent days is not very supportive for the continuation of the bull trend. It just could be the retracement to the upside and nothing more. Well, from that perspective, in the short term, environment, we should watch for some buy patterns in that area on the lower time frame. On the 4-hour time frame, we see significant thrust to the downside. Yesterday we said that probably market should continue a bit lower since it hasn't hit the 1618 target. And now we can see that market has hit even greater 1618 target from that pattern. A, B, C tap. You will see it on the hourly time frame a bit clearer, since on 4-hour time frame that's the same bar, but on the hourly time frame that's not the same bars. Okay, market now has hit 1618 target on 136.06 and has turned to some retracement. Well, here we could expect three different patterns. The first pattern that could lead to the retracement to the upside that we could use for the entry on the short side of the market could be the bread and butter sell pattern. And the nearest area that market could reach for that pattern is 137.64, the nearest 3.8 resistance. Okay, but very often it's more common for the euro currency that market usually reaches at least 50% retracements when they start the bread and butter trade. From that perspective, I think that this pullback should be around between the 138 and 138.50 area, somewhere in that area where market could reach and then continue move to the downside. Another two patterns could be formed. The second pattern could be the double repo buy. If that will happen, and then probably market could continue a bit further and at least to that area of confluence resistance. So now this question, our major question is how deep this retracement will be. And depending on what patterns market will form, this retracement will be different. I just want to discuss with you three different scenarios that could appear. Well, the first scenario is bread and butter sell. If market just now continue move to the upside and reach some area between 138, 138.50, between that area and 50% of that thrust. Okay, in that case we just should search for the possibility to enter short in the continuation of the downmove. The second environment, as I said, double repo buy. Now market should show return back below this green line, that is 3x3 moving average. Okay, close below it and then close above it again. If that will happen, this could lead to the more significant retracement, at least to the confluence resistance at 138.47, 138.63, or maybe even to the 618. It's difficult to say currently because we need to see how this potential move to the upside will develop. But the major condition of the double repo is that market should not reach some significant resistance area during the penetrations of that green line. These retracements and moves of the market should be very shallow. It should not hit any significant fib resistance areas, fib resistance levels. That will be the double repo buy. The third scenario you could see on the hourly time frame. Well, that's by the way this ABCD pattern that we have discussed. Market has hit 618 targets right here. Okay, the third pattern that I prefer to see, that's it. I think that could give us more confidence to enter. Probably you could even try to enter scalp buy by this pattern. This is the potential butterfly, bullish butterfly buy pattern. The 127 extension of that butterfly target, nearest target is 127, coincides with the 618 support on the daily time frame, 135.62. And if market will form this butterfly, this will give us the more confidence that probably market will show some significant retracement. And I think that this retracement should be at least to the confluence resistance area that we have discussed yesterday. And in general, the appearing of the butterfly pattern, personally for me, is a bit more confident scenario than two others that we have just discussed. Well, speaking about this intrinsic ABCD pattern, we can see that 100% extension stands in agreement with the nearest fib support 137.74, 137.90, and 1618 target stands in agreement with the confluence resistance 138.87. It's very close. So, taking in consideration the fact that this is just the first pullback on the daily time frame, although it's rather deep, we still could expect some deeper retracement, since this is the first pullback after the strong thrust on the daily time frame. And I think that the minimum retracement will be at the confluence resistance 138.47, 138.78. Well, but we still can't exclude that this could be a retracement even to the 139.98 to the 140 area roughly. It's right here. Well, that's been said. In general, market stands now at support. Market is forming some kind of patterns that could trigger the retracement on the intraday charts, and this retracement could reach as far as 140, but I suspect that this will be somewhere around 138.50 area. It's more probable. Well, from that perspective, you could act twofold. First first possibility is, if you're a scalp trader, you could try to trade on the long side of the market patterns that could appear on the intraday chart. If you're a daily trader, just watch for retracement when retracement ends at some area of resistance. This could be that area or maybe that area. When it will finish, then you could try to search the sell signals around that areas to in continuation of the move on the daily time frame. But be careful, because today is the FOMC announcement about rate decision. Also, today will be released the ADP employment report. This data is really significant. Well, because it could appear some surprises from the FOMC. Since the inflation is growing, and our regression model that we've discussed in our weekly research tells that in the nearest 1.5 year, the 2-year, 10-year spread on the US Treasuries will tighten significantly. Well, that could happen mostly if Fed Reserve will show some hints on the potential rate hiking. So be careful, because inflation now in the United States is really high, and despite that the growth of the economy has no sufficient pace to the upside, Fed Reserve in fact could appear at that situation where it will have no choice, and it will have to hike rates. because inflation growth is really significant currently. Well, that's all for today. Keep an eye on the clearer patterns that could be formed on the 4-hour and hourly time frames, and act as you want. Because if you're a scalper, you can try to buy. If you're a day trader, you could wait just for ending of the retracement and enter on the short side of the market.